Think Florida's housing market is unstoppable. Think again. Behind the sunny beaches and pastel-colored homes, cracks are spreading fast, and in 2025, some cities are heading straight for a serious downturn. Home prices are sliding, insurance bills are through the roof, and inventory is building at a pace not seen since the last big crash. Could your neighborhood be next? That dream property might just become a financial trap overnight. In this video, we're counting down the 10 Florida cities where the real estate bubble is bursting wide open. This isn't a small dip, it's a full-blown shakeup that could flip the Sunshine State upside down. So, if you want to stay one step ahead, you're in the right place. Hit that subscribe button, give this video a like, and ring the bell so you never miss the breakdowns we bring you only here on Nation Peak. Number 10. Fort Lauderdale. Fort Lauderdale, long hailed as South Florida's playground, is showing serious signs of strain. Once considered a beachfront goldmine for investors, snowbirds, and remote workers, the market here is cooling faster than expected. Inventory has skyrocketed, up more than 80% in just a year. Homes that sold for $650,000 in 2023 now sit at around $580,000 and still struggle to attract offers. What used to sell in days now lingers for months. The biggest culprit? Insurance. Homeowners are shelling out more than $7,000 a year on average, up 50% since 2022. Add HOA fees that easily top $500 a month, and affordability has gone off a cliff. Investors are pulling back hard. Nearly a third of condos and homes owned by investors are now listed below their purchase price. Even Airbnb hosts are struggling, with occupancy rates falling double digits year over year. Fort Lauderdale may still look picture-perfect from the outside, but the foundation is shaking. Would you still buy here in 2025? Drop your take in the comments and don't forget to subscribe. We've got 9 more cities to cover, and it only gets worse from here. Number 9. Cape Coral. Cape Coral, often called the Venice of America thanks to its miles of canals, is no longer smooth sailing. In 2025, this once booming market is steering into stormy waters. After years of rising prices, the trend has reversed. Home values are now slipping 5 to 7% year over year, and listings sit on the market for more than 70 days on average. The problem? Overbuilding. From 2021 to 2023, developers flooded the city with new construction. Active listings more than doubled, but buyer demand never kept up. Now supply has overwhelmed demand. On top of that, flood insurance premiums are crushing homeowners, some paying $8,000 to $12,000 per year if they can even find coverage. And let's not forget the city's hefty utility expansion fees. New buyers in certain neighborhoods can face $30,000 or more just to connect to city water and sewer. Mortgage rates near 7% have only added more pressure. Locals are priced out-of-state interest has cooled, and the economy, still tied to tourism and construction, doesn't have the diversity to keep momentum alive. Cape Coral may look like paradise, but under the surface, 2025 is shaping up as a cautionary tale. Seen price drops firsthand in Cape Coral? Tell us below and stick around. 8 more cities are still ahead. Number 8. Ocala. Ocala, Florida's horse capital, is galloping into trouble. Once known as an affordable inland escape, Ocala surged during the pandemic as families, retirees, and remote workers moved in. But that surge has turned into oversupply. Active listings have exploded from around 800 to nearly 3,000 in just 2 years, a jaw-dropping 275% jump. That's not growth, that's oversaturation. Homes that once went for $310,000 are now closer to $275,000 and still struggle to sell. Developers chasing cheap land and demand trends simply built too much, too fast. Some neighborhoods feel like modern-day ghost towns. At the same time, wages never kept pace. Between 2020 and 2023, values shot up more than 50% while local incomes barely budged. Add in rising insurance costs and a job market in manufacturing and agriculture that's losing steam, and you've got a recipe for slowdown. Ocala still has charm, horse trails, rolling hills, and plenty of character. But in 2025, the housing market feels more like a rodeo gone wrong. Would you still call Ocala a hidden gem? Drop your thoughts in the comments. Number 7. Tampa, once the jewel of Florida real estate, is now facing its shine wearing off. In just 2 years, listings jumped from fewer than 3,000 to more than 4,500 homes, an 80% surge. Builders went all in on condos and subdivisions, but now inventory is sitting still. Higher mortgage rates are a key factor. Payments that used to be around $1,800 a month are now topping $2,600. That jump has priced out thousands of would-be buyers. Zillow data already shows small monthly declines, but that's likely just the beginning. Investors are rushing to unload properties, some at 5 to 10% losses just to cut ties. Property taxes and insurance premiums have climbed more than 40% since 2023, while hurricane risks keep pushing costs higher. Homes now average 44 days on the market, more than double what we saw just a couple of years ago. Realtors are offering concessions, but buyers remain cautious. The once booming Tampa housing scene is cooling fast. What's the vibe in your Tampa neighborhood? Let us know below. And keep watching because the next 6 cities may surprise you. Number 6. Jacksonville. Jacksonville, the largest city in Florida by land area, is also showing some of its biggest cracks. Active listings have climbed from 2,200 in 2023 to nearly 4,000 in 2025, the highest level in years. Prices are now under pressure from too much supply and not enough demand. Builders overshot in suburbs like Orange Park and Middleburg, but when mortgage rates approached 7%, buyers vanished. Fitch now estimates Jacksonville homes are overvalued by about 26%. The local economy isn't helping. Logistics and shipping, key to Jacksonville's job market, are slowing down. Port activity has dropped 14%. Cutting into paychecks and mortgage approvals. Flood insurance rates are also punishing homeowners, rising more than 60% in some areas. And with about 1 in 5 homes owned by investors, the flood of price cuts is only getting worse. From downtown to the riverfront, Jacksonville is sliding into a correction that could take years to recover from. Live in Jax? Share what you're seeing below and don't forget to subscribe. The top 5 cities are coming next. Number 5. Sarasota, famous for its white sand beaches, cultural hotspots, and luxury lifestyle, is heading for a major reality check in 2025. The luxury market that once burned red hot has cooled dramatically. Active listings have more than doubled in just 2 years, now topping 3,700. Those million-dollar waterfront homes that once sold instantly. They're now listed closer to $975,000 and still sitting unsold. Zillow reported that Sarasota hit nearly 40% above fair value during its peak. That bubble has popped. Retirees and out-of-state investors, once the backbone of Sarasota demand, have pulled back. Market turbulence and inflation have made buyers cautious. And then there's insurance. Waterfront homeowners are now facing $8,000 to $10,000 annual premiums as standard. Pair that with mortgage rates near 7%, and even affluent buyers are hitting pause. Homes now average 90-plus days on the market. Realtors are throwing wine and cheese open houses, offering credits and incentives, but it's not enough to move inventory. Sarasota still looks stunning, but beneath the surface, it's shifting into a buyer's market wrapped in luxury packaging. Number 4. Port St. Lucie. Port St. Lucie, once seen as the perfect balance of affordability and suburban calm, is officially overheating. In 2025, researchers at Florida Atlantic University report the market is overvalued by 40% or more. Median home prices hit $410,000 in 2022, while incomes hover around $62,000. That disconnect has stretched affordability to its breaking point. Inventory is up more than 35% year over year. Homes listed last year at $430,000 are now back on the market at $360,000, with incentives like closing credits and rate buy-downs just to attract attention. The city's infrastructure is feeling the strain. Overcrowded schools, worsening traffic, and stressed utilities are making life harder for residents. Insurance is adding another burden, with waterfront homes averaging over $6,500 a year. Port St. Lucie may still look attractive from the outside, but in 2025 the dream has run into a wall. Number 3. Fort Myers. Fort Myers, once the poster child of Florida's pandemic housing boom, is now showing one of the sharpest reversals. Between 2022 and 2024, home prices skyrocketed more than 65%. But by 2025, that rocket has crashed. Median prices are already down about 6% year over year, and inventory has surged past 5,000 homes. Hurricane Ian left scars that still shape the market today. Insurance premiums spiked, now averaging $9,000 to $11,000 annually, even for homes outside major flood zones. That's enough to kill deals before closing. The rental market is struggling too. With tourism slowing and Airbnb revenues down sharply, many short-term rental owners are dumping properties at a loss. And for locals, it's even worse. With incomes under $60,000, home ownership is increasingly out of reach. Fort Myers still has Gulf Coast charm. But in 2025, affordability and insurance costs are turning the market upside down. Number 2. St. Petersburg. St. Pete, known for its artsy vibe, waterfront parks, and booming downtown, is facing a housing storm. Active listings have surged past 5,600, the highest in nearly a decade. That much supply has already pushed median home prices down from $450,000 to about $390,000. Airbnb hosts and pandemic-era investors are pulling out as the rental market saturates. Lower occupancy rates and slashed nightly prices are leaving many properties unprofitable. Homes once considered prime are now underwater, financially and in flood-prone zones. Flood insurance has skyrocketed, with premiums up 60 to 70% since 2023. Waterfront homeowners now pay $10,000 or more annually, and that's unsustainable even for higher earners. With local incomes under $60,000, many residents are priced out, pushing buyers to nearby cities like Clearwater and Largo. St. Petersburg remains stylish and vibrant, but its housing market in 2025 is under massive pressure. Number 1. Lakeland. Expanded Lakeland, tucked between Tampa and Orlando, was once marketed as Florida's next big growth hub, affordable, convenient, and full of promise. But in 2025, the shine has worn off, and the numbers tell a sobering story. Inventory has surged by more than 60% in just 2 years, now approaching 5,000 homes on the market. Prices that climbed to $350,000 in 2023 are slipping back, with some neighborhoods seeing month-over-month declines of 2 to 4%. That's not a seasonal slowdown, it's a market unraveling. The main issue is overbuilding. Developers jumped in during the boom, covering South Lakeland and Polk County with sprawling subdivisions. But when interest rates stuck near 7%, buyers evaporated. The influx of new homes collided with shrinking demand, creating an oversupply problem that the market simply can't absorb. Investor activity adds even more fuel to the fire. More than 30% of current listings are investor-owned, and many are being slashed in price as owners race to exit. Panic selling is spreading, turning what could have been a slowdown into a full-on correction. Even though Lakeland isn't coastal, it hasn't escaped Florida's insurance crisis. Premiums have jumped 40% in just 2 years, with average annual coverage costs now between $4,000 and $5,500. For working families already squeezed by inflation and higher mortgage payments, that's often the final straw. And the job market? Growth in logistics, trucking, and warehousing has cooled. Slower migration and a weaker labor market mean fewer new buyers. Lakeland may have looked like a safe bet just a couple of years ago, but today it stands as a cautionary tale, a market where growth raced ahead of reality and demand couldn't keep up. Lakeland had its moment in the spotlight, but in 2025, it has become the symbol of Florida's housing correction, a city where the cracks are no longer hidden but impossible to ignore. From Sarasota's luxury condos to Lakeland's starter homes, Florida's real estate story in 2025 isn't about endless growth. It's about a dramatic reset. This isn't a minor cooling trend. It's a correction, a reckoning, a reminder that no boom lasts forever. For years, the Sunshine State was ground zero for investor optimism, remote work migration, and fast-rising values. But now the pressure points are clear. Inventories are swelling, insurance costs are crushing deals, and affordability has broken down for everyday families. The truth is, no housing market is immune, not even Florida. And what's happening here could easily ripple across the rest of the country. If your city made this list, you're not alone. Tens of thousands of homeowners are experiencing the same squeeze. If it didn't, pay attention anyway, because what's happening in these 10 markets could be tomorrow's headline where you live. At Nation Peak, our mission is to cut through the noise and bring you real data, real stories, and real insight into what's happening in America's housing markets. We don't sugarcoat trends. We show you the facts so you can make smarter decisions. So if you want to stay ahead of the curve, now is the time. Hit subscribe, like this video, and ring that bell. Every week we break down the economic forces, the housing shifts, and the financial undercurrents shaping America's future. Because what happens next won't just affect property values, it will affect families, investors, and entire communities. And the more you know, the better prepared you'll be. We'll see you in the next one.